Good morning and good afternoon. I hope that everyone has enjoyed the UK Africa Fintech Summit so far. My name is Brian Zhang. I'm the Executive Director of the Cambridge Center for Alternative Finance at the University of Cambridge Judge Business School. We are a center specializes in researching fintech, and we have an African research team based out of Nairobi as part of the UK FCDO funded Cambridge Alternative Finance Collaboration Network to facilitate intra-regional and cross-regional fintech knowledge creation, exchange, and transfer. Our African team is led by Patrick Conte, the former governor of the Central Bank of Sierra Leone, and we have research operations in MENA and the Asia Pacific region as well. It is my great pleasure today to moderate this panel on encouraging the fintech revolution in Africa. And I'm delighted to be joined by our esteemed panelists today, who are Tarak Fatiem from the Financial Regulatory Authority of Egypt, Faraz Rojit, the head of the Financial Services Department at the Mauritius Economic Development Board, Michelle Chevinga, CEO of the Global Policy House, Mohammed Bahad, CEO of Peacock Financials, and last, certainly not least, we have with us today Stephen Marshall, the Chief Commercial Officer at the Crown Agents Bank. So this panel will discuss the African fintech market fundamentals and underlying trends that are enabling technology-enabled financial innovation, the opportunities and challenges in building a digital market infrastructure, and perhaps more importantly, building trust in digital financial services. The current landscape of fintech regulation and regulatory innovation in Africa, and finally, concluding thoughts about seizing the moment and strengthening the partnership and collaborations between the UK and Africa in fintech. So there will be time towards the end for the panel to answer questions from the floor. So I do encourage you to post the questions in the chat throughout our conversation. Now, first, let's get out to know our panelists better. So to our panelists, can you please say a few words about your respective work and its connection to fintech, whether it's about regulating fintech activities, investing in the fintech industry, or actually leading a fintech firm? So let's start with Tarak, then we go to Faraz, Michelle, Mohammed, and Stephen, please. Tarak, over to you.
Good morning, everybody. I hope you can hear me fine. It's a pleasure to be part of this panel. My name is Tariq Ibrahim. I'm part of the Financial Regulatory Authority, who is the regulator for the non-banking financial services industry in Egypt. The legislative landscape is split between the banking financial services and the non-banking financial services. We are part of a team focusing on an initiative led by the regulator to act as a facilitator and provide programs where we engage with the different fintechs, understanding their business model and making assessments to see if the current legislative landscape needs specific fine-tuning, working on maybe projects, plans for fintech law and things like that. Pleasure to meet you all.
Thank you. Faraz, over to you.
Thank you, Brian. My name is Faraz. I'm from the Economic Development Board of Mauritius. The EDB Mauritius is the apex government entity mandated to entirely promote Mauritius as a financial services hub, but also as a doing business hub. We're also there to advise the government on long-term strategic economic planning and the country branding in its entirety. One of the interesting things about the Economic Development Board of Mauritius is the fact that it acts as the quasi-regulator for the sandbox license. And well, I'll come to that later on, but Part of it is under the sandbox is the fintech sandbox. So the EDB is the quasi regulator, but not for the members attending this session, not for them to get a wrong idea. We are not judging party, so we promote Mauritius as the fintech hub. But all the projects that we do license at the level of the Economic Development Board goes to what we call a National Regulatory Sandbox License Committee, which is the ultimate decision maker. And that National Regulatory Sandbox License Committee comprises the banking regulator and the non-banking financial services regulator, amongst others. Just what we are doing in terms of Africa, most of the work that we're trying to do is to position Mauritius as the ideal fintech hub for going into Africa, building on the ecosystem that we have put in place here, but most importantly, the access and the market access and the internet connectivity that we have vis-a-vis or for Africa.
Thank you, Faraz. Michelle, please.
Thanks, Brian. Good morning, everyone. Good afternoon to some of you, I'm sure. Fantastic to be here. So my name is Michelle Chivunga. I run my own fintech here in the UK, but it's very much focused on looking at emerging markets. It's very focused around blockchain and emerging technologies like AI, cybersecurity, and a little bit of quantum too. One of the main focuses for us is actually trying to close the digital divide around the world. So we focus quite heavily around capacity building and training and education, mainly really working with, kind of governments around the world to look at how can we actually facilitate and encourage more fintech activity around the world, especially in emerging markets. I also, advise several governments, and I sit on the African Union's digital working group, where we are looking holistically around the opportunities on fintech and the digital economy to actually drive growth in the continent of Africa.
And Stephen, please.
Thank you, Brian. Thank you all. Again, welcome to all the participants as well on this UK Africa FinTech Summit. So I'm Stephen Marshall from Crown Agents Bank, the Chief Commercial Officer. We're a UK-based bank specialising in emerging and frontier market foreign exchange and payments. So a narrow focus, but with a wide breadth of geographic specialisms. Our engagement with fintech is on several levels. So one, we onboard a lot of fintechs as clients. So we act as an aggregator for foreign exchange and payment services into emerging and frontier markets with a particular specialism on sub-Saharan Africa. We work with fintechs, so we onboard them as clients. We also partner with fintechs where we're looking to extend our geographic reach. So how do we connect into local payment rails? We often do that through fintechs on the ground. And thirdly, we acquired a fintech in 2019. It was a New York-based fintech that had built a payment gateway, and we have integrated that payment gateway into the bank's payment offering so that we look and feel much more like a fintech player, albeit with a British banking license to boot. So that's very much our engagement with fintechs, Brian.
Thank you very much, Stephen, and the rest of the panel. So our first session for this panel is really about what are some of the African fintech market fundamentals and enabling trends you have been observing, especially in light of COVID-19. So we at the Center recently published a global COVID-19 fintech market rapid assessment report in partnership with the World Bank Group and the World Economic Forum. The funding is based on a survey of nearly 1,400 fintechs operating in 170 countries. And the results really show that the fintech markets in both North Africa and Sub-Saharan Africa had recorded considerable growth during COVID-19 across market segments from digital payments, digital lending to digital banking and insurtech. So what have you observed and what do you think are some of the key drivers for that growth? Let me start with Stephen, please.
Sure, thanks, Brian. Certainly what we've seen is a rapid move towards digitization of particularly payment corridors. Now, part of that has been, of course, driven by COVID-19. And we recognise that with the shutdown in various economies around the world, people have struggled to access the traditional cash-based remittance companies in order to send money back home to friends and family. And that has pushed more digitisation. We've seen that more with regards African payment corridors than other emerging and frontier markets around the world. And I think that's, in a large part driven by how receptive the continent's population is to digitisation. You know, we know that Africa is very much the poster child for all things mobile money related, and represents, you know, still today a really significant percentage of global mobile money payment traffic. So we think the population on the ground across the continent is very tech savvy, is very digital friendly, is embracing digital payment technologies. What we tended to find was it was their friends and family who were living in Europe, the UK, the US, and other parts of the world who'd fallen into more analog type payment methodologies. And now they've been forced to digitize given the impact of COVID, and that's then tied them back into the more digital friendly atmosphere in many of the African countries. So we've seen obviously digitization over the course of the last 10, 15 years has been a steady progress. COVID has really driven it fast, and it's driven it, we believe, from what we are seeing, much harder in the African economies, because the population on the ground in Africa are so receptive to a digital path.
Great, thank you very much. And Michelle, what are you observing, perhaps, you know, in the digital assets or blockchain space?
Sure, Brian. I think, you know, what we are seeing is certainly, you know, an appetite for alternatives is how I'll put it. I think because it's been very, very difficult with COVID to access, you know, the normal, you know, financing platforms, including, you know, sort of the banking system, you know, what we're seeing within the digital asset circles is actually a shift in people's behaviors in general and how they are responding to money as a whole. So certainly a lot of people are engaging a lot more with alternatives, including things like cryptocurrency and Bitcoin. So the digital asset market is actually starting to grow, you know, quite rapidly. And there's been a growth, I think, even in Africa, when you're looking at countries like Nigeria, Kenya, South Africa, you know, where there is more and more engagement with cryptocurrency or decentralized finance. And we're seeing this trend is starting to grow. The more and more people are becoming aware about the alternatives, you know, around financing, then we're starting to see quite a bit of an appetite. You know, when we're looking at digital assets as a whole, I think the digital asset market space is going to transition, I think, over time. We're starting to see big institutional players come into the marketplace. So you're looking at the likes of PayPal, you know, insurance company, MicroStrategy, and a whole range of others who are starting to warm up to different forms of digitized assets. And I think because of this is happening, and because there's better communications around what these assets actually have to offer, we're starting to see a lot more appetite for these assets. I think the challenge is very much around how do we engage with this market space, you know, when there's very kind of little clarity around things like regulation. So there is a challenge around that. But we're certainly starting to see, especially sort of younger people, you know, again, Africa is a young continent. So you're starting to see a lot of the young players coming in, entrepreneurs, you know, businesses, women-led businesses that cannot access loans or cannot access finance are starting to look at these alternatives. And in fact, Africa, what we've seen generally with digitization is that, you know, we've always kind of had digitization. So it was quite easy, you know, with COVID for Africa to transition. So we've had things like, you know, drones being used, you know, IoT devices being, you know, deployed across Africa. And even with blockchain, even though it's fairly early, you know, stage, I think in Africa, it's very untapped in Africa. There are still loads of companies, you know, that are utilizing blockchain already for things like land registry in Ghana. You know, in Nigeria, when you're looking at things like payments and remittance space, I know loads of fintechs who are now playing around with blockchain-based solutions. So we're definitely seeing a very heavy appetite. And then, of course, when you're starting to introduce things like decentralized finance, Again, there's a big appetite. That's like $1 billion industry. So I think we're going to see quite a lot of growth. And the cryptocurrency market is pretty much stepping its foot down and saying, look, we are kind of here to stay. It's now almost $1 trillion industry, of course, kind of driven by the surge in Bitcoin. So yeah, there's a lot of activity going on, definitely.
Okay, thank you, Michelle. Now, please allow me to go to Mohammed, actually. So if you can actually take your time to introduce a little bit more about Peacock Financials and what you do, and probably share with us some of your observations, probably in robo-advisors and in the data area in Africa, please. Go ahead, Mohammed.
Thanks, Brian. Hi, everybody, and I'm happy to join this session. So I am the CEO founder of Peacock Financials. We are working especially on data field and some fintech solutions like the robo-advisor, like the personal finance management, and also some blockchain applications. And actually, we are launching some open banking solutions through APIs for banks, insurances, etc., and also for some things related to frauds management, anti-money laundering, etc. So we are working in Africa, company based in Morocco, and we are leading some strategic projects with African Union and with some big banks in Africa and also in Europe. Just a little bit about my career. I'm a former investment manager and risk manager. So I'm coming with we are coming with the real ideas and with the real solution to the problems faced by the SMEs in Africa and by the big companies. So we suggest the right solutions for the right problems. So, for example, as you said, if we talk about the robo-advisors, so the use of the robo-advisors for management wealth services can provide several advantages, as you may know, over traditional services that rely on human advisors. So one appeal of using a robo-advisor is that they are easily accessible instead of having to set an appointment with an advisor and attend a meeting at a physical location. Robo-advisors offer clients the possibility of obtaining financial services, financial advices, and managing investments at any time from anywhere with an internet connection only. And robo-advisors can also reduce the costs of financial advice. In contrast to human advisory firms, robo-advisors can save on fixed costs such as the salaries of expensive financial advisors or the maintenance of physical offices. As a result, they can reduce minimum investment requirements. So in Africa, because of the use of robo-advisors is still not really maximized. We are having not more than five robo-advisors working properly in Africa. It is because of trust, because of many features which are not existing actually in the robo-advisors, and people in general are preferring to go with something easy to use, which is calling somebody and giving him the right investment solution instead of going to a robo and without having this human contact. So actually, it's not really maximized, and we hope that it will be in the next future a right solution because of many advantages. But I'm not saying that we should replace completely humans, but we should have it as a complemented solution to the capital human, of course.
What are some of the perspective, from the lens of regulators and policymakers? Let me go to Faraz first, and then Tarek second. Faraz, please.
Thank you, Brian. I joined Stephen and Michelle in what they said. With regard to the Africa fintech market fundamentals, I think there is a move to embrace digitization, especially in Africa. And I think that Africa was more or less ready, but the COVID pandemic has just accelerated and catalyzed that. With new technologies like blockchain and artificial intelligence being the new norms, even countries like Mauritius started jumping on the bandwagon, and we have embraced technology insofar as it can enable, or it can act as an enabler for financial services. There have been a number of regulatory developments, Brian, like you mentioned, including the introduction of what we call the Custodian Services Digital Asset License, which is basically something that is effective as from the 1st of March 2019, but it is there. And Mauritius actually, from what we understand, is the first jurisdiction, or has become the first jurisdiction to provide a regulated environment for the custody of digital assets. There's also the Digital Asset Marketplace License. We have also issued guidance note on securities token offerings and the interplay between the conventional securities, as we call them. So it is more to provide a common set of standards in terms of licensing for securities token. We have also introduced regulations pertaining to crowd lending. So there is a peer-to-peer rules that has come into place this year. So in a nutshell, I mean, there are a number of licensable activities which have been introduced in Mauritius, notwithstanding the regulatory sandbox license. There is also the Central Bank of Mauritius, which is working on issuing its centralized bank digital currency. So I think all of these licenses and push towards digitization, coming with empowering legislations, is meant to provide a regulatory environment for the safe custody of digital assets, so that, you know, investors have the comfort, they have the clarity when it comes to the exchange of digital assets, etc. At the same time, there is a number of international blockchain companies looking at the jurisdiction. There's a number of international fintech companies looking at the jurisdiction. So we have to have the sandbox as well. At the level of the sandbox, the regulatory sandbox license for fintech, we are working on strategies and projects which also include wealth tech, insurtech, digital sukuk issuance using smart contracts, wealth building tech, digital bank. I joined Mohammed Robo Advisory is one of the segments that we are actively looking at. So all of these, Brian, is meant to ensure that there is a regulatory environment. But I hasten to add one thing. The idea, at least the pitch, where Mauritius is looking at and going for, is meant to ensure that the legislations connect the dots for commercial viability. All the legislations are meant here to guide the operators in the field. It is not to have fettered regulations that make businesses very difficult. This is not something that we're looking at. One of the things, as we always say this in Mauritius within the regulatory bodies, is that you never regulate the technology. You cannot regulate the technology because of the speed with which the technology is evolving. But what you can do is you regulate the distribution of financial services for the benefit of the end users. And this is what we are trying to do at the level of Mauritius. And this is one of the best practices which we are sharing with our African regulators, because we are part of the African Union and we are part of a number of networks. So we share best practices, and this is something that we are encouraging, but we're also building on best practices in other African countries as well.
Let me turn to Tarek. Egypt has seen an extremely sort of active and vibrant sort of fintech market with a flurry of activities, right? Even during COVID-19. So what are you witnessing from the vantage point of the FRA? Just unmute yourself.
Yeah, a little bit of delay. Okay. So let me first just touch on, from a paytech perspective, most of my fellow colleagues on the panel, like most of the fintech momentum in the world is actually in the area of payment processing and exchange. This has been going on in Egypt for the last 4 to 5 years. There was a national initiative to try to organize that. Although this is not necessarily the financial regulatory authority's perspective, but as a financial services regulator for the non-banking sector, we've been cooperating with the Central Bank of Egypt, whose their jurisdiction is to control that. It's very fundamental from a non-banking financial services because we see it as an underlying platform. So most of the non-banking financial services at the end of the day are going to be using payment technologies to facilitate the exchange of the transactions at the end of the day. The Central Bank of Egypt actually issued some laws in the last couple of years and started to encourage a model, not necessarily based on blockchain and a distributed environment, but where the banks act as the backbone and they defined a role of aggregators and retailers, and quite a few number of companies actually started to come up and take licenses. And we currently in Egypt have a healthy, a vibrant environment for payment processing with a lot of competitive solutions for pay providers in Egypt. And this is actually also in line with the financial inclusion and trying to reach out to the non-bankable segments. From a non-banking financial services perspective, the two most interesting initiatives that we are seeing are the ROSCA model, as well as some of the crowdfunding models. We've been monitoring them very closely. We are taking an approach which is a risk-based regulation. Most of the players in the market are implementing pretty good governance in the way they are starting up their business. So we're watching them very closely, and we're planning for some regulatory rules to help facilitate that, and specifically in the area of digital onboarding and things like that. There are a lot of challenges because of the current laws, but in general, we're trying to work with them to help facilitate the full digital experience. But most of the players we've seen so far are actually conformant with good governance. So they're more of self-regulated, and we are working very closely with them to make sure as things grow, we have a regulatory framework that can encompass the requirements.
Thank you very much, Tarek. So next we turn to the discussion about market infrastructure, because we all know to truly unleash the power and the potential of fintech for economic development and for financial inclusion and for women empowerment, we really need to create a more sustainable fintech industry in Africa with a fit for purpose digital market infrastructure. Now, can I turn to Mohammed first to encourage that sustainable development of the fintech market? Building trust is perhaps equally, if not more importantly, than building a digital market infrastructure. There's a difference between both physical infrastructure and soft infrastructure. And data and trust is central to that debate and that conversation. So from your perspective, what are some of the key challenges and opportunities surrounding data usage, data privacy, and data protection in digital financial services in Africa?
Yes, thanks, Brian. This is a very important question when it comes to data. It's some people are really giving big importance, and some others not at all. But it should be clarified. Digital financial services providers and their businesses, their business partners now have the opportunity to develop new products and services, especially as the field moves beyond payment services such as bill pay, credits for consumers and small businesses, and insurance. Data-enabled digital financial services can also be better tailored to fit consumer-specific needs. In addition, the use of customer data could help improve consumer awareness, understanding, and behavior. For example, by providing just-in-time prompts that capitalize on information about consumer preferences and insights regarding how to positively influence consumer financial behavior. But so all those are big potentials of leapfrogging development. Now there are some potential risks. Data collected through mobile phones, for example, and telecommunications are exponentially increasing. So the creation and rapidly increasing usage of digital data trails by firms providing digital financial services has raised the issue of consumer risks that are currently not well understood by consumers, industry, or government actors. This is particularly concerning in nascent markets where large numbers of lower incomes consumers are accessing services in countries where consumer protection and data protection frameworks, regulation, and supervision are underdeveloped, which is unfortunately the case of many countries in Africa. So, for example, rarely are digital financial services systems in emerging markets encrypted from end to end. This weakness raised data security risks from handset use through to service platforms and networks. Cybersecurity risks can facilitate consumer loss of privacy and inflict financial harm, such as identified theft. In addition, it can put providers at risk and undermine public confidence in the digital finance ecosystem. Another example is the use of non-traditional data and advanced data analytics to create proprietary algorithms for credit scoring. Although these developments can facilitate the extension of credit to previously unserved people. And this is actually what we are trying to do, is to develop those algorithms which will help people to increase trust by implementing those APIs of fraud detection, of anti-money laundering for capital markets, for example, and for investment funds, for brokerages also. So unfortunately, what we are seeing actually and observing in Africa is that startups are focusing mainly on solutions, what kind of things they can bring to the market, what kind of features, but unfortunately they are not focusing on the risk, cybersecurity, on fraud, which are for me the main things that should be implemented before talking solutions, because solutions and technical stuff, I think this is something that everybody can build using the right frameworks, etc. But when it comes to security, this is a huge potential that we can capitalize in Africa to really boost the sector and give especially more trust to the financial services as a sector, and to companies and people, of course.
Thank you very much, Mohammed. Now, can I turn to Faraz? So Mauritius has set out a very ambitious agenda, right, to digitally transform the nation's economy, especially with the publication of the Digital Mauritius 2030 strategic plan. So how do you see FinTech and the digital financial services fit into that wider picture?
Thanks, Brian. You know, the Digital Mauritius 2030 strategic plan, it sets out an ambitious blueprint with emphasis on ICT infrastructure, innovation, talent management, and cybersecurity. I think the gist of the strategic plan is to ensure that Mauritius becomes fully digital and technology enabled. But the strategic plan also highlights the importance for the promotion and development of fintech-driven services to ensure that there is growth in this prominent sector. So the plan aims to develop a stronger and more vibrant digital economy. But as you are aware, I mean, the government of Mauritius is trying to take a leaf of what is happening really in developed economies, but as well as in emerging countries, and mostly from Africa, to see how to develop the right framework to graduate the sophistication of the jurisdiction for innovative segments to be nurtured, including fintech activities. You would see that when it comes to fintech, and this is in the strategic plan, but is also in a number of budgetary speeches made by the government of Mauritius, the Ministry of Finance, the Ministry of Financial Services. I think the idea is to work on that ecosystem. And I think Mohammed is absolutely right. The focus cannot only be, you cannot only be just the activities or the enabling regulatory environment. I think it goes beyond that, and I think a number of African countries are increasingly doing that, is developing the right ecosystem. The ecosystem needs to be in place, and the ecosystem goes beyond normal regulations. It is more about the market infrastructure. It is all about cybersecurity. It is all about the protection of privacy and how do you manage and deal with big data. Because one of the things, and it is part of the strategic plan, Brian, but it is also part of the government's vision of building Mauritius as a fintech. But one of the things that we are increasingly seeing, increasingly happening in the fintech space, is that a number of the services being provided by fintech companies are free. One of the reasons these services are free is because the ultimate aim is to capture those data and consumer preferences and consumer behaviors, so that they mine that data and they sell it to other companies. The problem with that is, if those end users did not consent to that, and they are just using an e-wallet, for instance, or a platform to store their cryptocurrencies, etc., they did not consent for this kind of use. So I think it is very important that we do that. So the ecosystem is extremely vital in helping any country, especially the African country, because it is the next frontier, the African continent, because it is the next frontier of growth. It is very important that we get the ecosystem right, we get the market infrastructure right, and we get the data protection and how and privacy right. And this is what the government of Mauritius is doing as well. There is a lot of discussions happening around African countries at the moment on how to look at the fintech ecosystem. So we are part of that, and there is a lot of discussions which are happening as well on the services front, or the trading services agreements, including at the level of the AFCFTA, the Continental Free Trade Agreement. So I think there is a lot of momentum being driven. The Digital Mauritius Strategic Plan 2030 works along those lines, but it is there to ensure that the ecosystem is right for fintech activities to develop.
Thank you very much, Faraz. Let me go to Michelle. So digital entity is a key and indeed essential component of a digital market infrastructure. What are some of the implementable solutions and indeed scalable approaches that you have seen that can really accelerate the adoption of a digital identity in Africa?
Thanks, Brian. Just to pick up just quickly in some of the points that have been made so far by Mohammed and Faraz, I think the data, element is actually really, really crucial. And certainly, from, an African perspective, I think one of the challenges, as pointed out already, is actually how do we create that data ecosystem? So yes, ecosystems are important to kind of facilitating, activity to happen. But I think even within the ecosystems, there's quite a lot of work to be done around engagement within those ecosystems, be it with the regulators as well as the innovators within the ecosystem. So digital identity, of course, is one of the biggest, if not one of the most important areas to consider. This in Africa, I think there's still about 400 million people without identity of any sort. And a lot of these people within that category is actually, for example, women or marginalized groups, refugees who don't have any form of identity, which basically means they cannot have access to the core services, including financial services, education, health, and a whole range of other areas. So it's a very, very critical area I think we need to look at. And some of the solutions we're certainly seeing from the innovators side of things is actually very creative usage of things like blockchain-based identity or sovereign identity, self-sovereign identity, which is really bringing people back into the ecosystem and bringing back into the economy, right? And some of these solutions, I think when you have solutions like Flex ID in Zimbabwe, which again is very much looking at digital identity, and this is powered by blockchain, and really trying to help onboard a whole range of people, including those in the rural areas that don't necessarily have to have the internet, to onboard people and get people back into the system is really important. But one of the more critical things is actually back to your point that Mohammed was trying to highlight, is actually around the security. So where you have cryptography and encryption-based methodologies being used in designing some of these products and services, then you're automatically starting to protect and create an environment, that is protecting the user, and that is giving that user the power to actually control, the data or that digital identity that the person has. That is very, very important, because that again shifts the dial a little bit in the sense that that data is not being lost and being captured by either big firms and being utilized or misused. I mean, the issue around data protection is a huge one. We've heard of scenarios where people have taken data, because data is openly accessible, and people are playing around because regulations are not necessarily firm in place. So consumers are starting to actually pay attention to how are you using my data? What opportunities do I have to have a say in what you're doing with my data? That argument is very, very important. I think as we move forward and we start to bring to the market, digitized identity solutions, then you're starting to empower. I mean, your question earlier on, Brian, was very much around empowerment, around sustainability. If we can start to create identity, to women farmers, to women, across Africa, means small, medium enterprises, have a form of digital identity, and you can able to start to create opportunities for them to access capital, for them to be able to access markets, new markets for them to operate, very, very significant. But you're doing that within a secure and safe environment is the point I'm trying to make. And that is underpinned by data. And whoever holds data is pretty much king. Today, and what I would really like to propose, and what I have proposed, even to the African Union through the CFTA, is that we need to think about investing in building Africa's data capital, as I call it. If we can start to strengthen Africa's data capital, then you're going to have a lot more power and a lot more leverage, and that goes to individual level. It goes to MISMI level, where again, if you have that identity, which is pretty cool. Then you can start to empower, and you can start to give people opportunities to actually start creating their own opportunities, including creating their own jobs, right? The technology itself is actually pretty much the easy bit, because technology does what you tell it, right? And how you design your algorithms, again, matters, and who is designing the algorithms, again, matters, because, what you design has to avoid things like biases that are being created. So again, using things like artificial intelligence, machine learning, and all that really, really matters. And Africa is in a good place at the moment, because we're still kind of early days in terms of untapping the opportunities with emerging tech. How we design, how we take advantage of those emerging technologies can actually be very transformational for the continent. But we need to be able to understand how these technologies actually respond. We need data. We need to be able to have access to data. We need to ensure that there's data flows, across our borders. And then the CFTA paves a wonderful opportunity for us to actually capture that and start to deliver that. And I know, the young fintechs across Africa are starting to do this and are leveraging data but we have to have the right environment, a regulatory environment, in order for us to do that.
Thank you very much, Michelle. Now a question to Tarek. So cybersecurity is nothing new, right? But risks associated with digital financial services are perceived to be on the rise, both by regulators and by fintech firms themselves. So what measure has the Financial Regulatory Authority of Egypt has adopted or is considering in order to mitigate some of the emergent cybersecurity risks?
Great, Brian. Thank you very much. I want to start from the foundation. I do agree with Faraz, Michelle, the digital identity and creating a digital identity for each physical identity is a key component for any offering of financial services and increase of that. The process of doing that, the technologies that can be leveraged to do that have to be done at from an ecosystem perspective at a national level, because we're not just talking about financial services here. It can be leveraged once the digital identity is in place. It can be leveraged for other governmental services, medical services, even retail services. So the foundation of having a digital identity is process and being able to trust the nature of the consumer or the beneficiary of the service. At the end of the day, is going to be important to track the transactions, to gather information about this particular digital identity. Where this information is stored is an important part. How is it distributed? In which kind of infrastructures? Who's going to have access to that? The laws of the personal data protection and the behavior analysis of the individuals is very important as well. These are all important aspects that needs to be looked at, and the regulators in Egypt are collaborating in putting a framework where we can have a national approach to this kind of ecosystem. But definitely, it all starts from the digital identity and the ability to track the transactions of the individuals and the consumers, where the data is collected. There's a lot of the debate about the cloud, where the cloud is going to be, and the use of the cloud in general, what kind of data is going to be on the cloud. This is one of the challenging, at least in Egypt and most of the MENA region, the use of the cloud for storing this data. While it's becoming more and more of a reality and a trend, there's still a lot of regulatory challenges to accept that. From protection from an encryption and cryptography, this is something that is important, and it's already in place. This is not the challenge. Technology is not the challenge. It's the implementation and the distributed nature of the implementation that is challenging for the regulator in order to allow for something, for this ecosystem to be monitored or to be analyzed. Use of behavioral analysis or artificial intelligence to analyze the transactions and who has access to that is also going to be an important part of that framework.
Thank you very much, Tarek. So to Stephen, if I may, so the Crown Agents Bank is really influential and important sort of market maker in fintech, especially in emerging markets. So what role do you say both retail and institutional investors can play in the digital transformation of the African financial market infrastructure and in building trust in digital financial services?
That's a really good question, Brian. In terms of the role they can play, I think we're seeing increasingly, particularly institutional investors, really focus on the fintech sector in Africa. And why is that? Well, first and foremost, the global interest rate environment remains low. So in order to drive yield and return, investors are looking at a broader range of potential investments. So that's the backdrop. Why then fintech? Well, fintech, it's very evident that the financial services sector in broad terms is destined to be disrupted by fintech players at various levels. So that disruption clearly creates opportunity for significant value growth. Therefore, fintech becomes very relevant. Within fintech, and I think as Tarek mentioned, certainly in the Egyptian context, but clearly the wider global context as well, payment processing and payment services is probably the biggest single component part of financial services that is being disrupted by fintechs. So again, it drives that attention from the institutional and retail investor, into alternative asset classes in order to drive yield. They're looking at financial services because of broad disruption. They're honing in on the payment sector within financial services, within fintech. And then Africa, to touch on the point that Faraz mentioned, that the African continent is the new frontier when it comes to fintech and financial services. It's so ripe for rapid growth and development that the opportunities for an institutional or from a retail investor to make a healthy return is absolutely there, more so than any other continent on earth. Now, the second part of your question around how does that help drive trust, and that's such a key component part here. And for me, it's money that will drive trust. As the numbers get bigger, as the investments are larger, as there's more unicorns across the African continent, the numbers just get bigger. And therefore, the stakes to play at those tables become bigger as well. And one of the demands from certainly institutional investor base, and less so retail, but as many retail investors invest through other institutions themselves, that institutional demand for transparency, for clarity, for regulatory oversight becomes pivotal if you're going to keep driving the money machine that the African continent can harness through fintech. So I think there's a really important role to be played, but it's really important for the entire sector to realise, and we are just collectively representatives of that sector, that we all have a role to play in that, whether it's as a regulator, as a policy advisor, as a bank. There's a role to play in that, and we all benefit from the sector becoming more trustworthy. And we all ships lift on a rising tide. And I think we can all benefit in the same way.
Thank you very much, Stephen. We're seeing some really good questions streaming in through the Q&A session. Please keep them coming and upvote. I will pick some of the questions towards the end of the session. Now, let's move on to a discussion about fintech regulation, supervision, and indeed regulatory innovation in Africa. Let me start with a question to Tarek. So towards the end of the 2020, so Egypt published, as you mentioned, a new central bank law, which addresses cashless payments, digital banks, e-money, and cryptocurrency. Egypt recently announced a national fintech strategy. What is the financial regulatory authorities' current thinking about encouraging financial innovation in Egypt?
Great. So in support of the initiative for the Egypt 2030 vision, which, like most of the developing countries and emerging economies and developing economies, are focusing on the financial inclusion, fintech is going to be a primary catalyst to enabling that and realize. The regulators for the financial services collaborated with other regulators like the National Telecom Regulatory Authority, as well as the money laundering control units or the MLCFT regulators. And we have a collaborating environment where we are synchronizing together most of the shared fintech fundamental ecosystems that are going to benefit all financial regulators and help derive this particular vision for financial inclusion. From Central Bank of Egypt perspective, like you mentioned, the payment technologies have been thriving, and a lot of players in the last 2 years in particular. We currently have a little bit less than a dozen different player alternative for the different consumers to use payment technologies, and this is actually increasing the total amount of transfer of funds within Egypt, and giving everybody, most of the consumers, more price competitive, affordable money transfer opportunities or fund transfer opportunities. Like I said, from a non-banking financial services perspective, one of the key crowdfunding has been, and Roscos has been the two most leading fintech sub-segments that we see are going to help drive this vision for financial services being offered to the non-bankable consumers and beneficiaries in a way to mitigate the risks of non-formal mechanisms of savings and loan and loan sharks and inappropriate use or abuse of interests being offered and things like that. So this is something that we've been taking into consideration as we plan to we already have in the pipeline fintech law being offered to the parliament to be looked at, with specific focus in particular about the equity-based crowdfunding in the first few iterations of implementation. We definitely also have a lot of interest from an insurtech perspective. Most of the insurance companies now are starting to offer some e-policies and insurance policies remotely, specifically the ones that are pretty standard terms and conditions with an acceptable risk profile, not huge amounts, but the common insurance services can most of the time right now the regulator allows them to be offered completely electronically, as well as their claims processing and things like that. Also, from a capital market perspective, we've had a few investment banking and brokerage firms starting up completely from a digital perspective with digital business model without a lot of brick and mortar branches, leveraging their technology to offer, like Mohammed was saying, advisory services and educational services to the consumer to raise their awareness of the risks of capital market investment and educating them. So from a consumer awareness perspective, they are reaching to a new, I would say, a market segment of maybe the age group or that is not your traditional existing market players or consumers. And this has actually we've been tracking that, and we've been seeing that to be moving in the right direction as well.
Thank you very much. So for us, as you mentioned in your introductory remarks, right, Mauritius has a regulatory sandbox, the license for which was granted by the EDB, although the decision was made by a multi-stakeholder committee. So this sandbox seems to have a broader remit than just financial services, also including a wide array of applications relating to innovation. Can you share with us Mauritius' experiences with regulatory sandbox so far, and how do you see it can encourage financial innovation, advance policy development, and ensure consumer protection? Over to you, for us.
Absolutely, Brian. I think you're very right. The remit of the sandbox goes beyond fintech activities. Actually, in 2016, the government of Mauritius decided to create an enabling framework for all innovation, all types of innovation, whichever segment or field of activity it is. Now, I think one of the best strategic decision that was taken was to have that sandbox housed under the remit of a development board. I think the development board is there to connect the dots between policy making, advisory, but also in terms of making sure there is a commercial viability element. And the beauty of the sandbox in Mauritius, in all humility, Brian, is the fact that it is only one line. Section 24 of the Economic Development Board Act stipulates that whenever there is no regulatory framework or inadequate framework for an activity, they can apply to the Economic Development Board, that investor entrepreneur can apply to the Economic Development Board to have a sandbox license. Now, the Economic Development Board is empowered to make the guidelines as it deems fit. That's the first part. The second part is the sandbox license is basically an agreement. It is an agreement between the Economic Development Board and that investor/operator. And in that agreement, we go through each individual case. We look at the commercial aspects of it. We sit down with the investor and we ensure that we protect ultimately what needs to be protected, but we ensure that it makes sense for the investor as well to conduct that activity in Mauritius. While doing so, we ensure that there is no regulatory provision. While doing so, we ensure that should there have been a regulatory provision, it would have invariably fallen under the prerogative of a regulatory body in Mauritius. So we sit down with that regulatory body, we sit down with the ministries involved and ensure that we protect all the ends. There shouldn't be no loose ends when it comes to the sandbox license. The sandbox license now, Brian, is given for a period of 1 year. If within 1 year we look at that activity and we see that we are getting a lot of traction, a lot of momentum for that activity, then we go to the parent ministry, which is the Ministry of Finance in the case of Mauritius, and then we advise on having a proper regulatory framework. And from there on, it is channeled to the relevant ministry, the relevant government body, or the relevant regulator. We can also have an activity, and that has been the case for peer-to-peer, for instance, that it takes some time and the consultations are ongoing at the same time that the operator/operators have a license in Mauritius. So we renew that license for a period of 2 to 3 years. So the idea has been that we house that activity within the sandbox for 1 year, 2 years, or 3 years, and then we see how it pans out, and then we see if we will ever have a regulatory framework in Mauritius, depending on the market conditions and depending on whether we want this activity or not. This is the first part. The second part, Brian, we rightly pointed out, the remit of the sandbox goes beyond fintech. We have had applications under the sandbox for stem cells research, for instance, for film completion guarantee bonds, amongst others. But most of the applications, because of the innovative nature, pertain to the fintech activities. And because fintech is so, financial services and protection of customers is so important, and you have all the AML, CFT aspects, you have all the loopholes that can be had within a fintech activity. This is why in 2018, the government of Mauritius said that you know, the sandbox will continue sitting at the level of the Economic Development Board, but we will rope in the other regulatory bodies. It is a divided regulations in which, so you have the central bank, which regulates all banking activities, and you have the Financial Services Commission, which regulate all the non-banking financial services activities in Mauritius. So the EDB, the Bank of Mauritius, and the Financial Services Commission become the three administrators, if I may use the word, for the sandbox license. And of course, you have a multi-stakeholder sandbox committee that looks at licensing projects. And then the monitoring of a fintech project goes either to the Financial Services Commission or to the Bank of Mauritius. Now, I think it is a very good model, Brian, that which should be encouraged within Africa in general, because it allows the government to take a step back and see, as a policy maker, what are the risks, what are the opportunities, what are the threats when it comes to innovation-driven activities. And then after looking at it for 1 year within a proper sandbox environment, then they can ultimately decide whether you want to remove them from the sandbox, whether you want to create a regulatory framework, or whether you just want to graduate the sandbox for that specific activity and go beyond in terms of its marketability. And I think that is extremely important.
Thank you very much, Stephen. Well, for us, and then to Stephen, actually, we had two questions that really give us their experience in terms of policy making and in terms of financial regulatory authority. Now let's talk about central banking. So, Stephen, the Crown Agents Bank has worked with more than 20 central bank clients in Africa. What do you see as some of the common challenges these central banks face in regulating and supervising fintech?
That's an excellent question. First and foremost, let me empathise with central banks around the world trying to navigate the rapidly exploding fintech world. Is a job that I never wish to undertake. So I'm very grateful for our central banks around the world for stepping in. In terms of how the challenges that we see, and this is not unique to Africa, this is a global phenomena. It's, if you think about our journey to switch on payments into a country, doesn't matter which country, we'll go through various steps, but they can be broadly categorized as, once we've identified clients we want to onboard who want to make payments into said country, we're going to identify a partner on the ground to work with. We're going to legally contract with them. We're going to undertake a technical integration to connect into their API, and then we're going to require some degree of regulatory approval. And that's the bit that takes the longest. That's the bit where everything comes unstuck. So contracting is fine. Technical integration, generally it's okay. The regulatory hurdles, really difficult to predict. And I can't tell you whether it's going to take me 4 weeks or 4 years to go through the regulatory challenges. And usually, as a UK regulated bank, we want to play entirely within the rules. So usually what I'll do is I'll request a letter of no objection from the central bank to say, yes, the activity you're undertaking complies with our local regulations. You don't need to be a locally regulated institution, but we recognise that you are playing within the rules. Now, getting that letter of no objection can be really difficult. Now, I think in many markets, the UK included, regulation for fintechs is difficult. It's registration more than regulation because there are so many of them. There are thousands upon thousands of fintechs. And most central banks have the bandwidth and the capacity to deal with a few dozen banks. That's historically what we've asked them to do. And now we're saying, we want you to go from managing a few dozen banks or maybe a few hundred banks to dealing with tens of thousands of fintechs. And I don't know the in-depth answer on this. I'm sure my regulatory panelists can share whether or not their budgets have been increased similarly in terms of the bandwidth they now have to cover. I'm sure the answer is no. So they have to prioritise their time. Now, what that creates is generally ambiguity around the regulatory status. Now, when there's ambiguity, a boring old British bank is going to step away, because we're going to say, look, we are really thorough when it comes to the three-letter acronyms that everyone loves these days of KYC, AML, and CFT. We're really rigorous. And if we can't ensure that we are operating entirely within the law, we're going to step away. Now, conversely, somebody who's playing a bit more regulatory arbitrage, or maybe a bit more nefarious in their approach, is going to embrace that ambiguity. So actually, when there's ambiguity in the regulatory approval process, you actually invite in the least attractive players to work in your market. Now, that is, of course, never the intended consequence of a regulator or a central bank, but it is the unintended consequence. So I certainly don't say that to be critical of central banks. Brian, as you pointed out, we work with about 20 central banks in Africa, and many more around the world. We bank many central banks, and we see them as anchor relationships in a country, because I don't want to be operating in a country unless the central bank knows what we're doing and actually is supportive. Don't want us to be anywhere unless we're welcome. And in order to do that and to switch on these payment corridors, we need to find a way to navigate that challenge. So we've always taken the stance of calling out and recognizing the challenges, accepting that it's absolutely not the burden of a central bank or a regulator anywhere to overcome those hurdles alone, but acknowledging that we collectively have to work together to understand the ecosystem, and then to put the right regulatory constraints in place to ensure the best operators with the highest standards are the ones that are encouraged and invited in to make more seamless and more painless payment channels around the world. I can see people nodding around the virtual room. It's absolutely, it's always a sentiment that central bank governors share with me. So I'm only paraphrasing what's been said to me by much brighter people than I am. But I do think that's probably the biggest single challenge when it comes to facilitating global payments today.
Thank you very much, Stephen. So Michelle has some connection issues. Let me go to Mohammed first. So you mentioned about the future of open banking, right? What do you see some of the regulatory prerequisites that should be in place for open banking to take off in Africa?
Well, thanks. I would like to give to go straight forward. I will give an example, which is for me a very good example that we have led for now 3 years within the Arabic Monetary Fund. So with the idea is to have some working, first of all, before going to the laws, is to constitute some working groups and identify those subjects which needs to be highlighted, like the impact of blockchain technology in the continent, like payment, AKYC, data governance, and like Michelle said, about capitalizing on our data instead of having the African 90% of African data is hosted by foreign companies, which is not normal at all. So the first idea is to bring all the stakeholders around the table. Those stakeholders, it will be central banks, it will be fintechs, it will be some corporates, big corporates, as well as some countries who with some countries, for example, who already deal with those technologies internally to give us their expertise on that. So starting from there, those working groups will need to define what kind of security do we need to make in place. Today, to go to the payments, for example, to the payments field, to be a player in the payments field, you should absolutely have an agreement which will be a set of some documents, etc. But in terms of data privacy, we don't really find a law in Africa which will be exactly or with some small differences the same between all the countries. So if I am a fintech and I am a payment player here in Morocco today, and I want to go to Senegal or to Ivory Coast or to Kenya, etc., normally we should have exactly the same laws, the same protection in terms of data privacy. When it comes to, we said, for example, to a robo-advisor, we need to regulate also that. We need to say who is, for example, if I create a robo-advisor, I can't go directly to the market, and because in the investment field, we are about to make some big decisions. So we cannot just say that we have the solution and that's all. We should absolutely just have like a label from the central bank or for the capital markets, the organization, I mean, in the regulatory aspect, who will be saying that this is validated as a robo-advisor. I don't care about what you are using as an algorithm, but it should absolutely take this kind of security, this kind of features, etc., before going to the market. And depending on the solution, because the financial sector, I will not list all of them, but the general idea is to start from those working groups between all of us, all those stakeholders, and then go to the market. The last example I would like to underline, which we are including for our clients, is the anti-money laundering as well as the fraud detection, which are actually a big subject in the continent, and also in terms of a regulatory framework. If we're having in Africa, there is the association of a central bank in Africa. So starting from or working hand in hand with this association, I think we can come up with some very good ideas to give a sandbox, for example, or a framework that the startups can where the startups can build their own solutions there before going to the market.
Thank you, Mohammed. So while we're waiting for Michelle to come back, there is a great question in the chat, which I would put to the panel. So we talk about the digital market infrastructure, but also we should be discussing regulatory digital infrastructure. So the question to the panel is, can technology also be deployed to aid regulation of fintechs, as the standard approach is just not practical? I think there's a question referring to RegTech for regulators or supervisory technology. Any takers from the panel? Stephen, please.
I'll happily weigh in here. I mean, the simple answer is yes. And I think, to the point I made earlier about there hasn't been a commensurate increase in the budget afforded to regulators and central banks in this that's commensurate with the increase in fintechs and players in the market. So this is not about more bright people within central banks and regulators, eyeballing transactions or scrutinizing application forms. This is about absolutely acknowledging that the volume of cross-border payment traffic is increasing exponentially because we are seeing such a phenomenal growth in low value, high volume cross-border transactions. Gone are the days when, you know, a few thousand transactions a month through sort of typical US dollar correspondent banking chains was the predominant way of sending money into and across emerging and frontier markets. It's now a colossal volume of remittances. So can RegTech play a crucial role? Absolutely. I think to preempt a future question would be, is there a challenge associated with doing that? Again, I'd say yes, in that you look at the bandwidth that central banks have, and I know I've certainly had the conversation with some of the large central banks, so particularly Bank of England and the Fed, particularly the New York Fed, around the role that they can play in spearheading and championing the use of technology around the world. Now, whether that's in RegTech or whether that's just in regards to broader fintech, I do think the ability they have to convene people and parties together is really important. So for me, I think there's a really open space in RegTech to be engaging with central banks. And to be honest, most central banks I know, I think are really keen to embrace RegTech as well. What they've got just now is an enormous plethora of RegTech options, but a limited ability, or limited bandwidth to assess the pros and cons of each underlying RegTech option, which is why I think the convening power of, you know, whether it be a big central bank or whether it be, you know, a panel and a body like your own, Brian, that can look at, you know, a number of central bank participants around the world, being a fair and trusted platform for the sharing of information, and having RegTech really present into that, I think is a valuable use of time.
Thank you very much, Stephen. Look, we want to finish on time. We have 3 minutes. So here's the last question to our panel. So Fintech has profound potential to encourage trade, flow of investment, movement of talents, and exchange of ideas and knowledge between Africa and the UK. If you can make one suggestion to strengthen the partnership between the UK and Africa on Fintech, what would it be? Let's start with Faraz.
Yes, thank you, Brian. I think I'll piggyback on your previous question as well, and I think we'll merge the two of them together. I think the partnership between Africa and the UK, or Mauritius and the UK, or, you know, the continent in its entirety, is the fact that we need to do more in terms of AML CFT, for instance, one of the areas that we need to do more. And one of the ways to do more in terms of anti-money laundering and combating of financing terrorism is to have RegTech. I think there is an increasing amount of compliance which is being done on cross-border supply of financial services, of fintech services, etc. So I think the UK has already built a lot of buoyancy when it comes to the AML CFT framework, as well as the compliance part. I think it would be very important that the African continent can get the support of what has been achieved, of what the best practices in the UK when it comes to RegTech and when it comes to compliance for AML safety purposes. That's extremely important. And I think this is one of the areas where there is definitely a partnership opportunity. And importantly, most importantly, Brian, just before I end, most importantly is also the fact that the UK can understand the best practices, or the different scenarios and case studies in African countries as well, and work together to develop this system for RegTech compliance and AML CFT.
Thank you very much. Tarak?
Great. This is actually a great question. There's one thing, in general, we've been looking at the different strategies that fintechs can take into consideration, is either to go for the untapped market, go to the incumbents and present a value proposition where they can cooperate with them, or try to go ahead and compete head-on with the existing financial service providers. My advice, or the general direction we're trying to promote, is to look for the fintechs to help bring on the untapped market, and help this is going to be the nirvana for the regulator. This is what the regulator wants to see. Help how the fintechs companies from the UK, or from, in general, especially the UK, because they have a decent level of maturity, they have a lot of expertise, how to analyze the different go-to-market approaches, and see how to complement and help the regulator present the financial services to the untapped market. That would definitely be where I would focus.
Thank you very much. Michelle, welcome back. Just in time for the last question, which is about what one suggestion you can offer in strengthening the partnership between the UK and Africa on fintech. And on that note, she probably just dropped out. Let me go back to Mohammed and then Stephen. Let's see if Michelle can come back.
For me, there is many ways to accelerate this partnership, but the simplest one I'm seeing is to build like a platform where UK fintechs and African fintechs can collaborate. I am with a partnership mindset, which means that instead of running alone, I'm talking about fintech, UK fintechs. It will be a good thing that they create a partnership with existing fintechs in African market, because they know the market, they know the mindset behind, etc., and they will bring their expertise instead of running their business alone. The same thing can be done between the central bank in UK as well as the central banks in Africa. So strengthen the partnership between fintechs and in UK and central banks as well.
Thank you very much. Stephen, you have the last word.
Sure. I just echo what Faraz said, as well as Mohammed and Tariq as well. Like the AML CFT piece, risk and the embracing of reg tech to level the playing field, to ensure that there are internationally recognizable and auditable standards, I think would be an absolute game changer for the relationship between the continent and the UK, and vice versa. I think the UK in particular has an enormous amount to gain from this. So, I for one, will always champion that as the path for us to go down. So yes, strengthen the RegTech solutions would be the answer for me.
Thank you very much. So I'm afraid our time is up, and I hope you have enjoyed the panel discussion as much as I have. Please do join me in thanking our panelists, Michelle, Tariq, Faraz, Mohammed, and Stephen. And many thanks for the DIT for inviting us, and for Lamia, Roman, and the rest of the excellent conference team for all your hard work. Thank you so much for joining us. Passing over to Lamia.
Thank you, Brian, and thank you all the panelists. It was a very, very insightful session, and totally what I signed up for. The education and learning what's happening. How do we build this potential for the emancipation of tech in Africa out? And really, really insightful. I think this is just the beginning of a conversation, and we should really build on that and see how we could improve the tech system, ecosystem here. So now we go on a break. We'll go on a break for 15 minutes. Everyone should take out time to network, go on tables, as I always say, pop into tables, find out what people are doing. And I would also be around popping into tables and trying to chit chat with everyone. We'll be back, and when we're back, we will go through a session of videos, watching new innovative products and solutions from tech companies in Africa and the UK. So catch you later in 15 minutes.